Today's lecture, I'm going to show you exactly how I journal and how you can journal. Journaling is probably the most important thing in trading. No matter if you're an ICT trader, no matter if you're a supply and demand trader, it doesn't matter. Every single day trader that's really of value, of substance, has made a lot of money, journals on a day-to-day basis, and it is literally the most critical skill set I believe that you can have other than actually executing the trade. And then I'm as well as going to show you how I backtest a little bit and what my thought process. Obviously, for the journaling, it's going to be on backtested data. It's not going to be on live data because the market's closed right now. I can't really show you how I would journal. But yeah, that being said, let's get into it. I'm going to click new session. Let me move my big ass head. Let's go NQ. Yes. And then we'll do a 50K balance because typically you guys are trading on $50,000 account balances. And we'll do NQ and then as well as ES to be able to see the data. And then we'll do, we'll pick a random month. Pick a random month from January to May. All right. Well, now we have to go to this. Okay. Well, it's October. Okay. We'll do March. Great. So we're going to go to March. We're going to pull up from there to the 31st of March. Create session. Beautiful. Now that we have our session, we're going to jump on. Okay. So now that we have it pulled up, we have ES on the side. Oh, well, no, they're both NQ. Well, let me switch to ES. Okay. Now that we have both pairs pulled up, now we're obviously going to go into the macro open or the market open, I meant. So New York AM. So this is a Sunday. We're going to click next again. Monday. Okay, cool. So now that we're jumped on the chart, I'm going to look for a trade right based off of obviously backtested data. So let's look at the marketplace. Let's see if we get anything right here. We do look relatively bullish right now. As of now, we look like we do want to reverse. We can definitely continue on the higher time frame. Let me move my thing. Okay, so let's see what is happening in the markets right now. Okay, so I'm going to enter short here. I'm going to put my stops, and then I'm going to break down my thought process after the trade has hit take profit or stop loss. That is a very wide stop loss. I'm going to go for a 1-to-1. And I will be explaining everything after the trade has hit TP or stop loss. Okay, trade hit take profit. I forgot to put the limit out. But okay, now that we have the trade mapped out, we took a continuation based trade, right? So looking into this, right, what did I see here in order to enter the position? Well, okay, let's put out the text or let's put out the line first. Well, we can understand on the higher time frame, right, through this entire cycle here. Well, if we go on the text, right, make it white and we'll do 32-inch font. Well, higher time frame supported continuation to the downside. All right, so the higher time frame we've established, hey, we're displacing to the downside. It looks like we're going to continue simply because of the fact there's no really higher time frame levels that have gotten met yet for a reversal, right? So higher time frame supported a continuation to the downside. And then you would journal out specifically, okay, well, we have our line mapped out here. Well, we rebalanced into a SIBI there, mapped out. Great. And obviously, right, you would map out how you felt during the trade. So obviously, I don't feel anything because this is backtested data. But let's say this was a real chart, right? Let's say this was a real trade that you have executed, right? You would then map out specifically what you felt in the trade, right? So, for example, let's say hypothetically speaking, I felt emotional because we rebalanced causing me to be in drawdown for a short time period. All right. Obviously, I'm half-assing it right now because this is back-tested data. I'm just showing you guys as reference of like how you can actually do it. But you would basically provide more information here. Instead of just saying, I felt emotional because we rebalancing causing me to be in drawdown for a short time period, you would say, hey, I felt emotional because we rebalanced. I was in drawdown and I am working on the fear specifically of me being in drawdown and how to fix it. And then you would journal out, this is how I'm going to go about fixing it, X, Y, and Z, and obviously creating solutions for your problems, right? So then we rebalanced into a sell side imbalance, and then you could also map out a note. I targeted a 1-to-1 risk to reward ratio. The higher time frame supported a continuation to the downside, which all the characteristics basically meant for me to execute a trade, right? I'm not obviously trading my exact model on this. I'm just showing you rough draft of how you guys can do it. And the more you can provide here, the better, right? It shouldn't be simplistic and easy. Journaling is one of the only things in trading that should be well versed, well in depth, of you explaining exactly what your thought process is, why it happened, what you felt, how you felt in certain trades, in certain positions, what went right, what went wrong. Like you can add on, like, let's say another note here of saying, let's say the reason this trade worked was because higher time frame did not meet a draw on liquidity, causing no reversal to the upside, right? So, okay, now that we have that mapped out, now we have everything mapped out, right? If I go here, make this a little pretty and shit. Do this, boom, boom, boom. So now that you have this mapped out, you would screenshot this right here, right? You would screenshot everything about it. You would then go to Notion. You should get Notion. And once you're on Notion, right, you then obviously have all your backtesting pairs. You could, right, this is a backtested journal, but you could do the same for actual live data where you have your pairs here. You would put, okay, NQ. You would put the date. Okay, it happened on May the 5th. And then pips here is incorrect. It would be points, right? So how many points did you catch? Oh, I caught 51 or I caught 55 points. Great. Now that we have that identified, then from there you can obviously add on an image, right? So you can do obviously session, right? Was it London, New York, and then chart. You can choose a file of that screenshot, and then you would essentially take this file that you have here of this screenshot, upload it there. Now, how I would go about basically looking at the journal, right? And how I used to do it is I would take 2 times a week, right? The beginning of the week and the end of the week to review my weekly journal and then the previous week journal. So I would look at, okay, what went right from this week? What was the data that I had this week and why did it happen? This is critical. This is so important, and this is what will excel you to the next level as a trader. If you sit there and being hopeless and helpless and just saying, oh yeah, hopefully trading works out, but you're not doing this, you don't really want it bad enough, right? So when I explain in psychological lectures, like, hey, you guys could really be putting in more work, this is what I mean. This is the true work, right? Because once you have the actual data, you realize how realistic this is. And this also in turn helps your psychology, because then you could review your journal and say, hey, well, I won every day for the last 2 weeks. I had this win rate. I had this risk to reward. Everything worked out properly. The reason why it worked out was because I journaled, I back tested, I saw the information in front of me. I saw what happened, what went right, what went wrong, how I felt, how do I fix how I feel, right? But if you're hopeless and helpless in trading and you're just hoping shit works out, then you're a moron, right? And you should go pick another career and you shouldn't do day trading. This is where the real work comes into place, right? It's not from just fucking clicking buttons when you feel like it. No. It's from collecting data, refining your strategy, understanding what's right, what's wrong, why it was right, why it was wrong. This is where the value gets provided, right? So, okay, well, now that we have all that identified, right? Okay, cool. Now we're going to go into the next session, right? And obviously, these aren't trades. I mean, there's some of them are actually trades I probably would take, but they're not as accurate as obviously because I'm not trading my model here, right? But okay, let's pull up the chart NQES. Let's see if there's any PD rays we can map out. And obviously, I'm an ICT trader, so my trading strategy is much different than the next person's. Nonetheless, though, you still can basically use this to value of you, I guess you could say. Okay, so coming down on the higher time frame right here, we have displaced to the downside. The range that we are in this general range here, looks like we are actually in premium, or sorry, discount of this range that we're in here on the higher time frame. So in these case scenarios, typically I'll look for longs, but obviously we need to see what this draw on liquidity down here at 315 does. Are we displacing towards it, or are we reversing back to the upside because we are in premium? So I have a loose bias here. I'm not looking for anything specifically here up until we get true displacement. And obviously, yeah, that's pretty much it, right? Okay, cool. So these times are all messed up, I believe. Okay, no, this is New York. Why is it 7:15? Okay. Well, I don't know what's happening here. I don't know what the hell is happening here. Okay. FX replay just sometimes bugs out. Okay, so we do have SMT here. Now, I do want to see what NQ does. Are we displacing below this drawn liquidity here, or are we reversing? Okay, that SMT got invalidated. We are now displacing to the upside. So I will look for a little bit more bullish structure in order to validate a trade idea. Okay, so I will go short here. I'll put my stops above this candle here at 383. Obviously, this is not realistic. I would not have an 80-point stop loss. This is not my strategy, but I'm just showing you guys this on a hypothetical basis. So now let me go put out all my limits. So 1-to-1 R, right? Let's just put 1-to-1 for simplicity's sake. I want to repeat to you guys. This is not accurate, right? 20,210. 20,210. 2,210. Cool. Oh, that's my stop. Oops. 20,210. Cool. Okay, so now we have take profit mapped out, and I will break down what my thought process was on this trade, but I do want to repeat to you guys, obviously, this is not my model. This is not how I trade. It's just a hypothetical basis. So let's see now what happens. Let me skip to 1 minute. Okay, cool. Awesome. So that trade ended up hitting take profit. Now let's go into the chart specifically of what we saw in order to obviously validate. Well, I noticed, right, between 350 from this previous day low from Monday, this previous day low got displaced through. We originally swept it here. Price then comes back up to rebalance this inefficiency. We then start to displace lower. Us displacing below this internal low here validates shorts. So that was what's my thought process would have been. And then I would say, let's say for the entry, my text I would put out, okay, I entered the trade with my stops above that SIBI, factoring in a rebalance and acting accordingly. Beautiful. So I have that mapped out now. And then I can say, draw out another line, right? What did I notice? We displaced below a previous day low, validating to me a continuation sequence, telling me we should look for shorts, right? And then RR, risk reward ratio, 1-to-1. I felt emotional when we had the rebalance because I'm not detached from the outcome, right? So risk to reward was 1-to-1. I felt emotional when we had the rebalance because I'm not fully detached from the outcome. So, okay, well, now that you have that journaled, how are you going to go about fixing that? Right? You can even make a separate journal from your problems identified with specific journals, right? And then say, okay, well, this is how I'm going to go step by step of how to fix it, right? And then we displaced below a previous day low, validating to me a continuation sequence telling me we should look for shorts. I entered the trade with my stops above this SIBI here, right? Factoring in a rebalance and acting accordingly. Stops above, 1-to-1 R, right? So obviously, I'm not ever going to really have an 80-point stop loss or an 80-point take profit. This is not my model. This is not how I trade. Obviously, some baselines are obviously kind of like my model of what I trade typically, but this is just hypothetically speaking. You guys can take this with any account, or I mean, with like any trading strategy, I should say, right? So how close or far this is from your trading strategy, these are still the baseline fundamentals that are important to journal, right? So, oh, well, what did you see in the chart to then I have the idea of wanting to go short? Well, I saw we displaced below a previous day low, validating to me a continuation sequence telling me we should look for shorts right there. Well, I also entered this trade with my stops above the sell side imbalance there, factoring in a rebalance being able to happen, right? So not putting my stops down here because that wouldn't make any sense because we can rebalance into that sell side imbalance there. Well, my risk to reward was 1-to-1, but I did feel emotional when we had the rebalance because I'm not fully detached from the outcome. Well, now that you have a problem identified, how are you going to go about fixing that? Well, then you can map out on a screenshot somewhere. Well, I am not fully detached from the outcome simply because of the fact that I want to quit my job. So I need to become more psychologically aware about this and fix this mistake before it becomes lasting. Right. And then I would screenshot this and then I would go back to that journal and basically upload the file. Right. That's essentially what I would do. And it's so important for you guys to do this, right? So I showed two examples, very easy, just to understand the baseline fundamentals, but it's very important for you guys to understand this now instead of later, because this will help you so much, right? And I'm telling you, if you really want to see progression at a fast rate, do this both while you backtest and as well as when you're journaling live data. If you can stick to this exact setup, right, for the next 60 to 90 days, I promise you, I can't guarantee you becoming profitable, obviously, but I can almost damn near guarantee you'll be like 10 times better of a trader than you are currently. All of the traders that I've ever spoke to that are really demons, that I have bred, right, that are like making 20, 30, 40, 50 grand a month, and then as well as some traders online that I look up to even that are even farther ahead than me, they all follow this structure, right? Obviously, once you become like really, really profitable, there's no really need to journal anymore. Personally, I don't journal anymore unless I make a very drastic mistake in which I could have easily avoided. Then I'll journal, right, to make sure that problem never happens again. But yeah, that's going to be it for this lecture. I hope that you got the best out of the ability or to understand exactly what I said and what I meant on this lecture. And yeah, please, 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 please promise yourself that you will do this almost every day while backtesting and actually journaling live data. I promise you guys it will benefit your trading 10 times more than it is right now. Anyways, y'all, I love you guys. I hope you guys have a wonderful 3-day weekend. I will see you guys probably tomorrow.